Hello and welcome to week number 48. Only 4 more weeks left until the turn of the year, and we had last week an explosion in price action after Friday. The news of a new variant broke out and kind of collapsed markets in thin liquidity trading. One of the things I'm looking at right now is inflation expectations that aggressively dived from these highs from about the 3% level. And we had that, and we had sort of eyes on this one for majority of the last quarter. So since October, we were looking for a top out around here. I'm thinking we're starting to see that top now emerge more aggressively as we are moving into December and January. And I've overlaid this with NZD-JPY. One of the reasons I am looking to short NZD-JPY is because the Reserve Bank of New Zealand has his hiking path already laid out. It's well priced in. I can't really see any more positives for the New Zealand economy right now coming out. On top of that, New Zealand is notorious for locking down the island if there is any infections to do with the virus. So a new variant is very likely one of them maybe popped up in New Zealand, and they will aggressively limit restriction in terms of movement, and that will crash the economy, and hopefully we should see some more downside NZD-JPY. If I recall, we had NZD-JPY on our radar last week as well, so it's more a continuation of the last week trade idea post RBNZ rate hike. So that's one of the things we are looking at. And another one of the currencies that's right now very interesting is actually Eurusd. So on Wednesday, I went Eurusd long in a private group, my private trade channel. It was around these prices. I had to come out of that because it just didn't feel right. It didn't feel right, so I got out of the trade. I'm saying Wednesday, I think it was Tuesday, one of these days. Price was about 12.42. That was on Tuesday, I believe. And then it spiked up, but didn't really quite did what I needed to do. I needed a bigger push. One of the reasons we went Eurusd long was because in the Federal Reserve market priced in the rate hike path for the Federal Reserve too aggressively. So if you're looking at the US 2-year yields, it was just at levels that made no more sense to go higher. So it was already at really strong levels without Fed even giving any indication they will hike that much next year. Come Friday, and the news broke about the new variant, and this all collapsed. Eurusd pushed up, and the rest is history. Just really want to explain why Eurusd went up the way it did. Mostly because the ECB isn't doing anything, but market was expecting for the Fed to do a lot. Now with the new variant came out, market starting to reprice all of that, and that means that USD is actually a bit more vulnerable than Euro is, because Euro had nothing positive priced in. USD had a lot positive priced in. Power got denomination last week, and there's a lot of bullish bets in USD. They're currently getting flushed out. I'm expecting this flush out to continue next week. So if you bring up the Usd chart, this level here is really important to me. It's one of the London fixed levels. This was controlling price for quite some time. I'm expecting a bounce above there and see if we can attack 114 handle going to next week. There's a loads of data out next week, stretching from different Fed speakers, loads of PMIs from China, ISM manufacturing and services from the United States, retail sales and GDP from Australia. But there's only one or two things that I really have my eyes on that I feel like we have better control of trading them, where the other ones might be a bit wishy-washy. One of the things I'm really interested to see how market is reacting is Eurusd to the Tuesday inflation reading. So we're going to have inflation reading on Tuesday for Eurusd, and it's expected to print one of the highest it ever since the euro came along. I'm really hoping they're going to see price emerge on top of that and might catch a leg long on Tuesday. Go ahead. On Wednesday, we have Australian GDP, and it's slowing. So if this slow print comes through, I don't expect really a lot of surprises. But most of those data prints coming from Asia and Australia, I will be trading alongside with NZD-JPY. So come Wednesday morning and the GDP print comes bad, I might get into NZD-JPY short, but maybe not. Really what I'll be looking at is to see the data was supposed to come good, come bad, if it makes sense. So on Thursday we're gonna have retail sales for Australia. They've been going higher ever since for quite some time. So I'm hoping there's some bad print from the retail sales from Australia. That's when I'm gonna start getting aggressively short NZD-JPY. Or move on to Friday. We have Kaixin PMI. They've been moving higher. from China. If I can see there's like a bit slowing down there, I can see NZD JPY getting aggressive on that and exploring lower levels. So I will be timing my shorts as we go along. We have NFP as well, and there is no exact. It's hard to explain how NFP is going to play out. The data shows that the jobs growth been slowing a little bit, so the jobs growth isn't as strong as it used to be, but it's still trucking along fine. I think the wording we are looking for from the Federal Reserve leading up to the NFP is important. How worried are they about the new variant? That's going to change everybody's perception how they're going to trade it. So two trades that I think they should be fairly smoother working out. This one, we should find a couple of and maybe one handle high on EURUSD, specifically once we can clear the 130.20 level. And I'm also expecting NZD JPY to explore lower levels. There's loads of other movements on the other currencies. AED, CAD, and NZD all should be vulnerable in this current environment, because it will take about 1 or 2 weeks until we figure out how bad the variant is. So keep those in mind when you create the crosses as well. We probably want to explore those on the other side and then see how that all pans out. That's all I wanted to explain this week. I'm wishing you a profitable week. There's another thing I like to discuss with you is that currently, if you go on my website, speculatorstrading.com, I will be leaving the link in the comments box below as well, below this video. If you go into pricing, you can see there's different type of pricing models and different things you can buy. What I'm starting to do in this coming January, I'm starting a new FTMO challenge. So if you want to get funding, you found an account, if you had trouble completing your FTMO challenge, this year in January I did it and we won it after a few months, and all the members that were part of it, there was people winning up to $200,000 in funding. They really enjoyed it. So next year I will be doing it again. If you want to get into it, I highly encourage you to sign up. Now it's incredibly low price, $25 a month, and that will cover you then every single month as we're doing the challenge going to next year. If you don't know what the FTMO challenge is, hands over to the website. It's basically an online prop firm that if you win the free process challenge, which is one of them, you have to do 10% profit within 30 days, then 5% profit within 60 days, and then you'll be able to get then you're verified to trade with their capital, and the balance you can use is $10,000, $25,000, all the way up to $200,000 to trade with, and all of that risk-free to you if you can win the challenge, which I will be helping you to do so. Hope that's interesting to you. If you don't care for it, if you have your own capital, that's fine. If you know somebody who's interested and you think you can make use of it, definitely give them the heads up. Tell them to come over here, sign up to that. They can see how I trade it and how I manage the risk to go through the challenge, and I can then win there, hopefully get their funding as well. Very exciting going to next year. Again, all I wanted to cover this week. I'm wishing you a profitable week, and I'll catch you all on next Sunday. Bye for now.